All right. Can you guys see my screen? Can you hear me okay?
Yep.
All right. Awesome. Awesome. Well, thank you everyone for joining us today. And this is Victoria here, and you guys are in for a treat. For those of you who are rocking with me from the very, very beginning, you might already know this person. uh, Early on in the Telegram group, my husband was joining and chopping it up with you all, and it's been a while, so I asked him to come back, guys, and really just deliver some things that he is qualified to speak on. Okay, I mean we're talking. I mean my husband has been through the wire. He started this his whole trading journey a long time ago, homeless, and I'm not going to get into that story. I'm going to let him tell you that story at another time. But just because he has been through that experience, he's helped me to understand and appreciate and be grateful for the things and that I've achieved so far. And even though I'm still young in this trading journey of mine, I asked him to come here and share, what he's been talking to other traders, what his experience has been, and for him to share with you the number one thing that you guys can do to improve to become a better trader virtually instantly. And he has not shared this with me, so I am on my toes, as well as you all. So without any further ado, let me bring on to the front of the class the number one husband, Stephen. Come on now, honey. Let's do this.
Number one, I better be the only one. All right. Thank you. Thank you. Thank you. Thank you. Thank you. Yeah, so it's good to be back on. If you all been, like my wife saying, rocking with us like tips on fire. We had hundreds and hundreds, actually still hundreds of you all in the Telegram group and on the page. And there's a lot of stuff we used to cover back then, but in the environment that we're trading in today, it's a whole lot different than back in 2019, 2020. But when I first got started working with traders, believe it or not, it was in the late 1990s. I say I started working with traders. They were futures and stock traders at the time, some Forex traders though. It was like around 1998, 1999. And I would work with them on one specific thing, which is what it is I want to cover here. And while we can kind of go in depth on this, I want to kind of keep it small enough but yet detailed enough that you'll be able to walk away with some extraordinary value to become a better trader virtually instantly, believe it or not. And one of the things is this. When as a trader, obviously you're looking to go out there and be successful, and you want to make money, and maybe you want to leave your job, you want to be full time, or maybe you want to become rich or wealthy. Whatever your goal is, that's great. And along that path, one of the things that a lot of traders do is they go and they're buying the next shiny object in terms of indicators or the next bot, which is can be very dangerous, or they're chasing people's signal services and they're following all the lifestyle forex gurus that are touting their Bentleys and their Lamborghinis and all these different lifestyle things to entice you to pay the money. But at the end of the day, what you realize is no matter how many signals you subscribe to, no matter how many new indicators you get, or how many new quote unquote Forex gurus you follow. And by the way, that doesn't mean that they're bad. There could be some people that give you good content, good signals, and even good indicators, but you probably find yourself in a position that it's like, dude, why are you not able to put it together? Why aren't you able to win? Because every single day we're in a business that's absolutely extraordinary. Every single day you can pay yourself, right? Every single day you don't have to wait for the company to issue you a check weekly or bi-weekly. Every single day you can get paid. And it's you, it's no one else. It's just you. That is an absolutely extraordinary place to be in. So the first thing is this. We need to make sure that as traders, we are treating this like a business. This is a business. This is not a gamble. This is not some Las Vegas strip hustle. This is not a side hustle, as people would say. No, this is a business. And you want to approach it as a business owner and as a professional. But I want to get straight to what is the number one thing you can improve to be a better trader virtually instantly. Before I give you that, I want to give you the definition of something that is recognized, at least here in the US, in criminal law in the legal system. It's called crimes of passion. And how they define that is that it's a crime that's committed in the heat of passion, in response to some type of provocation in the environment or whatever, and it's emotionally driven, as opposed to a crime that was premeditated and deliberate. In other words, a crime of passion is something where a person just responded out of a heavy emotion. Okay. Now, why is that important? Because as a trader, you're looking at the chart, and I want to say this one thing, and I want you to understand what I'm saying here. What you're looking at is not what you see. What you're looking at is not what you see. Now, what do I mean by that? Let me give you an example. You can have three people, and all three of them are looking at a snake. One person sees a pet, another person sees a threat, and another person, the third person, sees it as food. But they're all looking at the same thing, but they're seeing it differently. So what's happening? Well, what's happening is what is filtering what they're seeing versus what they're looking at is all their life experiences, all their different biases, all their different significant emotional events they may have had, their different traumas, all these different things come in, and it creates a lens that filters what we're looking at, that by the time it hits us mentally and emotionally, we're seeing something based on those mental biases. Now, why is that important? Because you're looking at charts. You're looking at charts. But my question is, what are you seeing when you're looking at the charts? Now, typically as traders, you're looking to buy, you're looking to sell, you're looking for the indicator to point a certain way or whatever it is so you can buy or sell. But here is the number one thing you need to improve. And understand this, if you improve this, the game will change for you. It is not improving buying, it's not improving selling. All traders, every single trader that succeeds, they have improved consistently, perpetually, and persistently their decision-making abilities. Because at the end of the day, what you are doing is making a decision. The buy or the sell is the action or the result of the decision. Now, my question is, what is causing you to make your decisions? Now, if you go back to the crimes of passion, if you're buying or selling decisions are emotionally driven, well, you already know that you're in trouble. We want to be on the side where every decision that we make is premeditated and it is done deliberately, not emotionally, and we're trading exactly the language that we're interpreting from the charts. Now, what do I mean by that? And I was talking to my wife about this yesterday, that the charts, when you're looking at the charts, I want you to look at it as a language, okay? And to kind of help you to understand this, if you don't speak Spanish, let's just say you speak English or whatever, but you don't speak Spanish, and someone comes to you speaking Spanish, they can be telling you something incredibly important. It could be even life-saving. But because you have not developed the ability to interpret and understand Spanish, everything is lost in translation. You're trying to understand, but just because you're listening hard, it's not going to instantly give you the ability to understand Spanish or whatever the foreign language is. Why is that important? Because with everything you're looking at in the chart, no matter how many indicators you have on it, or they can be naked charts, the price action is a language. And what you want to learn how to do is interpret the language of the charts. You can be supply and demand, it could be support and resistance, it could be moving averages. You can throw whatever indicator on there you want, which, by the way, every indicator is only a tool to give you information to help you to make a better decision. And if you're sticking to that and you understand every single day, I want to get better at my decision making. I don't want to get better at making money. I don't want to get better at buying. I don't want to get better at selling. I want to get better at making decisions that are rational and based on technicals and not irrational based on emotion. But we already know that, again, if you have not developed the mental and emotional discipline, a lot of the decisions you make are going to be based on emotion. And you'll find yourself in the position, it's like, man, the market's going against it. But guess what? The market never, ever, 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 and hear me say this, and hear me say this clearly, the market never goes against you. You were going against the market because the market is never wrong. The market is never wrong. Now, we can put on positions that we thought were solid positions, and it doesn't work out. That's par for the course. Doesn't mean it was a bad trade. It just means that, hey, if I followed my system, I stuck to the game, I played by the rules, and the position didn't work out. Guess what? It just didn't work out. It's just a position that didn't work out. But we have to understand the market never goes against us. That's not the language you want to use. And the reason why is you have to first understand the market is never wrong. And I would deal with traders and the news would come out or something and the market would go in the opposite direction that they were anticipating or that analysis was saying it would go based on the data that came out. And they'll ask a question. I understand the question. They're like, well, my goodness, why is the market going up? Or wait, why is the market going down? Did you see the news? And here's the simple answer, ladies and gentlemen. The market is going up because there's more buyers than sellers. The market is going down because there's more sellers than buyers. We will try to create a narrative around it based on news or all these particular things. But when you simplify it, the market is going up because there's more buyers than sellers. It's going down because there's more sellers than buyers. It's as simple as that. And if you want to really simplify it, there's only three things you can do with the market. You can buy or go long, you can sell, which is going short, or you can stay out. Now, if you think about it, with the world of chaos and all the different indicators you can slap on the chart and make it look like spaghetti or gumbo or whatever, or it can be naked charts, there's really one of three things you can do, which, by the way, whether you're a new trader and you're inexperienced, or you're working for one of these multi-hundred-billion-dollar funds and you're trading hundreds of millions of dollars or billions of dollars in other people's money or bank money, everybody has to do one of the three of the same things. They're buying, they're selling, or they're doing nothing. Okay, think about it. People that are making money are not doing anything different that you're doing. They're just doing it differently. I want you to catch that. People that are making money are not, well, they're not buying, they're not selling, they're staying out. They're doing something else. No, they're buying, selling, or doing nothing. Just like you buy, you sell, you do nothing. Those are the three things that every trader in every market, Forex, stocks, crypto, futures, commodities, options, you name it. You buy, you sell, you do nothing. Now, the question is, well, wait a second. It's the same thing. By the way, I want you to take this down as a side note. We're all made of the same stuff. We just don't use that stuff the same way. What does that mean? You have a brain. People that you feel are better traders than you, or more intelligent than you, or more experienced than you, they have a brain also. Well, they're probably using it, or not probably, they're just using it differently. When they're looking at the charts, they're seeing something a little bit different than you. But why is that important? Because you want to ask yourself, what is influencing your vision of what you're seeing on the charts? Now, if you go back to the crime of passion, if you had a significant, it's called C, by the way, SEE, significant emotional event, that can create a level of trauma. And let's just say you had something that was a significant emotional event at some other part in your life, and it had to do with loss, it had to do with fear, it had to do with something. Well, you go into trading, and if you're not developing situational awareness, meaning not just what's going on the charts, but what's going on with you, these traumas or these different emotional triggers can happen, and they could just come up, and it's causing you to trade a certain way more emotionally as opposed to technically. But because you're just riding those emotions and you don't have that gap time in between where you're looking at what's going on in the chart, you're interpreting it, and you're not rushing. You're not chasing green candles or chasing red candles because of FOMO, right? Oh my gosh, oh, it's running, and then you get in and you find out, oh shoot, you just bought the top. Oh my gosh, it's dumping. You jump in and you just sold the you bought the bottom. Sorry, you sold the top and you bought the bottom. And then all the guys like, man, why is this always happening? Well, it's not always happening to you. Hear me closely. It's not something that's always happening to you. It's something that you're causing due to the irrational decisions that you're making based on what you see that's happening on the charts. Notice I said based on what you see is happening on the charts. So this is all coming down to our personal interpretations of what we're looking at, then what we're seeing, all coming back to it being filtered through these different clouds of emotions and life experiences and our own desires. So what happens is you lose a little bit of money, you start to feel a certain way. Now I want you to think about it. Whether you're paper trading or trading with real money, which by the way, I have nothing against paper trading, but it doesn't give you the emotional experience that you have when you have real money on the line. And which, by the way, I want to get this, I want to make this clear because there are a lot of traders out there that truly believe, man, if I just had more money to trade with, if I had more money to trade with, man, I can get it. I can do it. And I'm here to tell you that is not accurate. And I'm going to give you an example, and then I'm going to let you know what I feel. By the way, you can totally disagree, and I'm fine with that. And I want to let you know what I believe is a more accurate way to put it. Back in, I may get some of the numbers and the dates wrong, but the story is correct. It was in the late 1990s. They're actually going into late 1990s, going into the 2000 when you had the dot-com bubble blowing up. It hadn't burst yet, but it was the dot-com boom before the bust. And there was an oil family in Texas. They had I think they had a couple $1 billion in oil assets or whatever. But anyway, they sold all their oil business. And I think after taxes and after everything was netted out, they had over $1 billion cash. And they looked at the tech market and the tech bubble just blowing up. I mean, everything was just racing up. And they're like, look, man, this is the perfect place to put the money. So they put virtually all of their money into tech stocks. I want you to hear me closely here. They put virtually all, because the market was moving up relentlessly. So they put, I think it was just over $1 billion or so. Again, I could be a little bit off on the numbers, but what I'm telling you is accurate in terms of the story itself. So here's the problem, though. They put all that money into the market, but they ended up buying the top. They got in right when the bubble burst. And now they have over $1 billion in, and they're losing tens of millions of dollars quickly. And the market kept falling. However, they're of the mindset, looking at the charts, it's going to go back up. That's all it's been doing, is going up. It's going to go back up. It's going to go back up. So they just kept holding their position. I think, and again, the numbers can be a little bit off, but I think it was after they had lost $700 million, they decided to flip their position from long tech stocks to go short tech stocks with a little over $300 million left. So guess what happened? They shorted the bottom. And then tech stocks started to turn back up. Long story short, a lot of details missing. By time they decided to get out of the market and call it quits, they had between $1 million and $10 million left in less than a year or so. I forgot the time frame. Out of putting just over $1 billion cash into the market. Now, why do I tell you that story? A lot more money is not going to make you smarter. When you trade, it's not how much money you start with, it's how much skill and knowledge you start with, on top of emotional control and mental discipline. Because you can start with a ton of money. If you have no emotional control, you have no strong mind management, and you're not following a rigid system with risk management, you're going to blow it up. That's just what's going to happen. It doesn't mean that you wouldn't have any winners here or there. It was, by the way, even if you have emotional control and you have mental management and all that, you're not going to be 100%, because that's just part of the course. Even if you stick to a system, you're going to have losing trades. But if you know you have an edge based on the system you're using, that's fine, right? But I'm just talking about the idea that all you need is more money to trade and you can become successful. Well, the more money you have going into the market with little to no skill and experience, that's just more money you're going to lose. That's it. More money does not make you a better trader. It does not make you a smarter trader. Now, on the flip side, you can have a little bit of money, but you have a high level of emotional control. You have strong mental management, and you have very strong trading disciplines, meaning you understand your risk and rewards. You're doing things deliberately. You're not doing things sporadically, emotionally, and haphazardly. You're not chasing red candles, chasing green candles. Everything is done deliberately, and you're sticking to strict rules, using a system that gives you an edge that you know that statistically over 5, 10, 15 trades, you're going to come out a net winner. And when I say a net winner, I'm not necessarily meaning, oh, out of 10 trades, you're going to have 7 winners and 7 losers. Which, by the way, there are traders that can have a 70% winning ratio and still be net losers when it comes to the P&L. And that's because you don't want to keep score, although there's nothing wrong with it and it looks good. The scoreboard isn't about, hey, out of 10 trades, how many did you have that were winners and how many did you have that are losers? No, out of 10 trades, what is your net loss or your net gain? Because you can have on the flip side, it may not necessarily look good. You may have 30% winners and 70% losers. That can look rather nasty on the winning ratio side. But what if your winners are 10x times the losers? Right? So for example, what if for every loser you lost $100 and every winner you won $1,000? That means you lost $700 of the 10 trades, but you made $3,000, giving you a net of $2,300. Right? So it's important to understand we don't want to be chasing. Again, don't get me wrong. There's nothing wrong with it, but that's not the proper scoreboard. Like, oh, I put on 10 trades and 7 of them were winners, and I have a 70% winning ratio or an 80% winning ratio, and that looks good, and they stroke your ego. But at the end of the day, what does the net P&L look like? Okay, and that is managed on a trade-by-trade basis. And that's all you want to do. Every single day, you take it one trade at a time, one good decision at a time. And you don't score yourself and you don't evaluate yourself on a day-to-day basis. That's like saying when a baseball player goes up to bat, he is good or bad based on that one at-bat. Did he strike out? Did he get a base hit? Did he run? Did he hit something? Did he have some runs batted in? Did he get a home run? Was it a grand slam? What was it? His whole career is going to be defined and summed up at that one at bat. No, that's not how it's done. It's done over the average of games and seasons and careers. So if you really want to start properly evaluating yourself, don't do it on a trade-to-trade basis in terms of the evaluation. You want to evaluate yourself at the end of the week. And you want to look at it one trade at a time. And instead of focusing on winning trade ratios, instead of focusing on how much money you want to make or how much money you're going to lose, focus on making one good decision, or as a company, as the CMD, I believe they're called, they teach their traders to focus on just making one good trade. That's it, just one good trade. Not trying to trade too much, not trying to trade too many things, and certainly not trying to trade too large. Because if you ever put on a trade and you get some drawdown, and we know drawdown is normal, and you get uncomfortable with the drawdown, your size is too big. Because we should be willing to accept the drawdown if we have our predefined risk and our predefined reward. We are already accepting that our stop could get hit, and if that stop gets hit, this is the acceptable loss. So if that's the case, when you put the trade on, we want to have the mental maturity and the emotional stability to be able to accept that. Now, what is a sign of the lack of maturity and the lack of emotional stability? Let me give you an example. Let's just say you have a trade on and you're looking at it and it's starting to approach your stop. And you're trading your P&L. And what I mean by trading your P&L is you're looking at what you're winning or what you're losing while you're trading, which, by the way, is not a professional way to trade. You don't want to be watching your P&L while you're trading, because that's going to fluctuate all day long. And what's going to start to happen is you're going to be starting to trade your P&L, not the charts, not the price action, not the language of what the market is saying to you. You're now starting to trade. If you're looking at stocks, you're trading green and red. If you're looking at MT4, you're trading blue and red. That's what you're trading, and that's what you're being driven by, and that's a losing strategy. So you're in a trade, and you see that the market is starting to approach your stop. And you're just like, man, look, I might as well just save this trade. I'm just going to close it out. It's getting to my stop. It looks like it's going to hit it, and you close the trade out. The moment you do that, you are not being disciplined. You have to be willing to accept that stop being hit. Does not matter, because the reason why is because you're teaching yourself to be disciplined and to stick to the system and accept the acceptable losses as well as the acceptable wins, and not trying to front run a stop getting hit or front run a profit target maybe coming up short. And I'll talk about that in a second. Now, I don't know if you know this, but plenty of time, and maybe it's happened to you before, depending on how long you traded. You have your stop loss in place, and you see the market approaching it, and you're just like, shoot, you just close it out, but it never hit your stop loss, and it reversed, and it ran in your direction. And now you're chasing because, man, why did I take that off? Guess what? That was a decision that you made. That's why I said the number one thing that if you improve it, you can become a better trader virtually instantly is your decision-making abilities in the moment where you're able to feel the emotion. It can be the excitement, it can be the anticipation, but it's not driving your decisions. There's nothing wrong with feeling the emotion. It's an exciting game. I mean, it's a thrilling game, right? It's one of surprises. There's one. It's a highly intense competitive game, and it is a game. To some extent, it's a battle to some extent. You can use whatever metaphor you want to use, but the one thing we know is that statistically, I mean, I could be a little wrong on some of the numbers, but 80 to I'll say 90% of all trading today is done by algos. It's done by machines. So it's like man versus machine. We're trading in an algo world, unlike it was 10, 15 years ago. So you're trading machines that are super fast and they're seeking liquidity. They're seeking you. And guess what happens? Guess what happens? They're looking to trigger your emotions to take your money. If they can get you, every trader that is not emotionally stable to follow a system and accept what's an acceptable gain or loss based on a system that they have that has a trade that has an edge, if they can trigger you emotionally, you will give them access to your liquidity, to your money. You will be part of the liquidity in the market that you're sweeping all day long, because that's what they do. Their business is to go out there and take your money. Understand, the markets do not care about your dreams. It does not care about your hopes. It does not care about how you feel, whether you're feeling good or you're feeling bad, you're feeling optimistic, pessimistic. It does not care. It is an emotionless machine that is an equal opportunity dream builder and dream killer. And we have to approach that understanding this market does not care about you. Even the human beings that breathe in those buildings don't care about you. All they want to know is where is your money in the market so they can go take it. Okay, so these people are not your friends. And now if you want to be able to trade that properly, strategically, is no different than a boxer going into a ring. You got somebody in front of you that wants to win. They want to take you out. It is a zero-sum game in boxing. There's a winner or a loser. That's just how it is. There ain't really ties. You have very, very few draws in boxing. You can have a draw, but that's very, very few. It's the same thing with trading. You have somebody on the opposite side. When you buy something, somebody is selling it to you, and the moment they sell it to you, they're of the opposite opinion of you. You're buying it because you want it to go up. They're selling it to you because they don't agree. So we have to accept that, okay? And we have to accept the fact that, hey, look, I'm human. I'm filled with emotion, and that's great. I can embrace that, but I'm not going to allow the emotion to be the thing that's controlling my decision making. And that is absolutely true. I don't care how many indicators you have on your charts, how many signals you get, and how many new shiny robots you get, and bots that you get, and platforms that you get, and webinars that you're on. That doesn't matter, because at the end of the day, you're the driver. Think about it like this: you can't drive for nothing. And let's say even make it worse. You're drunk and you can't drive for nothing. So not only can you not drive, you're drunk and you cannot drive. So that makes the situation worse. Let me ask you, does it really matter if you step out of the house and get into a $25,000 Toyota or a $500,000 Bugatti? The value of the car does not change the fact that you don't have the ability to drive and you're drunk, which means you're just going to have a more expensive rep driving the Bugatti versus driving the Toyota. But regardless of whatever vehicle you get in, you're going to crash it because you are not of the proper mind, which means if you are mentally impaired, your ability to make the proper decisions are not going to be there. And it's the same thing when you're sitting at your computer, you're looking at your screen, or you're looking at your MT4 on your phone or on your iPad or your Android, whatever it is. You are the driver of every single decision, whether you do nothing, whether you buy, whether you sell. And my question for you is what is the thing that is having you to make the decisions that you're making? So if we step back and we step back from the buy, should I buy and go long, or should I sell and go short, or should I do nothing? Because remember, those are actions. If you were to think about it in terms of cause and effect, the decision to buy, sell, or do nothing is the effect. The question is, what's causing that? What is causing you to make that decision? Well, if you're revenge trading, emotion, you're going to start making some irrational decisions with your trading. Now, your entire trading judgment is going to be clouded by some level of anger or frustration or disappointment or depression, and you're going to then start to magnify or amplify the losses, because you're now no longer being able to accept whatever the situation was. Maybe it was a bad decision. Maybe it was a bad trade, or maybe it was a good trade that just didn't work out. Which, by the way, there's a difference. You can put on a good trade that doesn't work out. Doesn't mean you can't trade. No different than a baseball player, which, by the way, and you probably already know this, if you play baseball, they are professional baseball, and you hit 30%, you're in the Hall of Fame. If you get 30% in school, you're in the Hall of Shame. You're not graduated, right? That's 30%. That's an E. That's a failing grade. But a failing grade translated to a high-skilled game where you need really good edges in baseball. Well, 30%, that gets you to the Hall of Fame. That means the best of the best of the best in baseball strike out 7 out of 10 times they're at bat. Now, if a baseball player, a professional, can go up to bat that many times, what is their interpretation? No, don't get me wrong. They want to hit the ball every time they're at bat. No professional baseball player is going to go up to the plate and say, I can't wait to strike out this time. No, every single time they have every intent to hit the ball. What they have to do, they have to read the pitch, read the pitcher, and be very quick with the eye to see how that ball is coming over the plate and make a split decision, a split-second decision, maybe in a millisecond decision, if they should swing and if they should swing. So they swing high, should they swing low? All these different things happening quickly. It's their decision-making ability at the plate based on all the data that they're getting coming from the mound where the pitcher is winding up that pitch. Is it a fastball? Is it a curveball? Is it what all kinds of knuckleball, all kinds of balls and pitches? Is it going outside, inside, up, down? Being able to make those decisions quickly. And guess what? There's no indicators superimposed over the mound that's giving them some moving average of the ball. That's giving them anything. It's their ability to see, their level of awareness, and to be able to read the pitcher. What is the pitcher's motion based on what you understand about this pitcher and the way they move and the way they wind up? What are you anticipating that pitch being? Every great baseball player, I would say every baseball player, one of the skills they have to learn is to be able to read the pitch. And the skill that you want to be able to learn is how to read the charts and allow what the chart is saying, not what your feeling is saying, not what your bias is saying. What is the chart saying? And then based on what the chart is saying, what are you going to do in terms of your decision? Absent of emotion, absent of your hopes, absent of your bias. I think it's going to go up. I think it's going to go up. Okay, well, then if you think it's going to go up, then you're going to have a bias to buy. And if you have a bias to buy, then guess what? There's a thing called confirmation bias. And confirmation bias means if you had a strong bias to buy a market, regardless of all the indicators and signals and whatever that is telling you this market is not going up, you're going to ignore that. And you're going to only look for everything and see anything that is going to confirm your bias that the market is going up so that you should buy. Right? Now, I want to go back to a point I was making about moving your stop or getting out because you think it's going to hit your stop and it doesn't. The same thing can happen on the top side. It's starting to approach your TP to take profits, and it's like, oh man, it went up there and pulled back, and you're sitting there with bated breath. Oh, it's getting close. It's getting close. Come on, man, give it to me. Like you're at the craps table or you're in Vegas. Come on, baby, come on, oh, come on, I got hit. Now, don't get me wrong. There's nothing wrong with that. I mean, because it's exciting, right? You're about to boom, you're about to cash out, about to hit your TP. It's going to feel good. But what happens is when it comes a few pips or a few ticks away from it, and then it pulls back. Now you start to feel a shift emotionally. And here's what I'm telling you. If you feel that shift emotionally, you're riding this game too much on emotions. You don't want to do that. I understand it, but you want to have some level of awareness and see that and say, okay, I don't want to be in that place, right? Because now you're being whipped around emotionally and ragdolled emotionally by every tick and every pip that you're seeing on the chart, however close it comes to your stop loss, or however close it's coming to your take profit. But what tends to happen again for the person that hasn't developed that maturity yet, and that emotional stability, it comes up to their take profit, and it pulls back. Maybe it comes again and it pulls back, and now they start to go into their crystal ball. Oh my gosh, it's not going to hit it. It's going to drop, and then they get up. They prefer to take something. I was talking to my wife about this because there's two types of fears in the market that traders will experience in general. You have the fear of missing out, and you have the fear of loss, and it's an absolutely deadly emotional trap to be in when you're in a trade. And what I mean is the fear of missing out is you don't want to get out now because you don't want to miss out on additional gains because the market can still move in your favor. But then at the same time, when it starts to move and it starts to draw down some of the open profits, or it starts to draw down and you don't have profits, now it's the fear of loss. Oh my gosh, you don't want to give back any more profits you have open. Oh my gosh, you don't want to lose any more money. So you're no longer playing profit targets and stop losses. You're playing ping pong with the fear of missing out and the fear of loss. So now, once again, emotion is driving your decisions. And it's not a healthy place to be for you. It's not a good mental health place to be, and it's not a professional way to trade. And again, it's not that you don't feel the emotion. You want to be able to have a level of awareness, and every time you're doing that, those are your moments to learn, your moments to lean into that emotion, accept it, and not try to fight it. This is not about suppressing the emotion. It's about understanding it, but at the same time, getting it under control, and then restating to yourself that I'm a professional and I'm going to stick to my system. Okay, I'm a professional and I'm going to stick to my system. There's a lot more that we can do, a lot more that we can go into. And if you all like this, I can come back. There's a lot of stuff that we can cover as it relates to this. But I just want to kind of give you an introduction. So let me summarize this, and we'll wrap this up. So I know I said a lot. And this is just me coaching with you, because this one thing I've been able to help traders become significantly better, regardless of whether they're trading Forex, they're trading crypto, they're trading stocks, futures, options, commodities, because they start to realize that they themselves are the primary indicator in terms of how they're making their decisions. So what I want you to focus on is thinking about how you're making your decisions. What decisions am I making? And where is that decision coming from? Is it a decision from emotion? Is it fear? Is it fear of missing out? Is it fear of loss? Is it greed? Is it anger? Is it revenge trading? Or whatever. And just start to learn to feel it, but don't let it control you. And just every single day, take one step closer to being disciplined and sticking to your system. If you put a stop in place, because again, you find yourself chasing markets. You have a winning trade, you got out too early, it's going up, you jump in, and now you gave back all your gains because you should have just stuck with the position. Those are mental errors that are driven by emotion. Okay, so I'm going to wrap that up right there. I'm going to turn it back over to Victoria. Hopefully you all got some value out of this. And I'll just leave you with one thing: don't trade your feelings, trade the technicals. The markets don't care about how you feel. Don't trade your feelings, trade the technicals. Whatever technicals you're using, naked charts, supply and demand, support and resistance, peak formation highs, peak formation lows, double bottoms, double tops, triple bottoms, triple tops, M's, W's, dojis, whatever your technical setup is, and whatever your trading edge is, trade that. Be damned the emotion that you feel. You're going to be feeling a certain way. That's fine. Just don't allow that to cloud your decision making, and don't have that to derail you from sticking to the plan. All right, Victoria, I'm going to turn that back over to you.
Well, thank you so much. It was incredible. I got my notes here. I hope you all did the same thing. I hope you're able to take get some value out of this video. We will be posting this, so we look forward to your comments, your feedback. And hopefully we'll get to do this again next week. Who knows? But guys, take everything that you just heard right now to put it into action, because we never ever have a video or any kind of thing, right? Whether it's recorded or live, without some actionable things for you can take away right away. So with that, we're going to go ahead and sign off, guys. Thank you, profit takers. We will see you in the next show.